Hello and welcome to a very important CNBC-TV18 conversation. My guest is Dr. Roland Busch, the President and CEO of Siemens AG. Well, I'll tell you why it's a very important conversation. Siemens AG is seen as the bellwether by the global economy as, an indication whether the global economy is chiming well, because it's practically the capex company of the world. And Siemens India is also seen as the bellwether of India's capex cycle. And as a sign of the times, Siemens India in the latest results announced a 70% rise in net profit. So looks like the Indian capex cycle is good. But I would like to know about the global capex cycle as well. Dr. Busch, thank you very much for your time.
Thanks for having me.
Well, I'm going to start with this global geo-economic environment. Everywhere the incumbent governments are getting voted out. And after the presidential debate, there is a bit of a change of mind even in the United States. If it indeed is a Republican presidency, do you see a big change in Europe itself, in your ecosystem for Siemens itself?
So I would not see a difference. I mean, we worked with all governments in the past successfully, also with the existing ones and that one before. So if that's, and you're reflecting on the United States, if that's a shift, we do not believe that there's a big change in the American market.
Well, actually, Trump has said that he will negotiate out of Ukraine in a day, even before the Jan 20 presidency.
I know, I come to that.
That's why I'm asking whether...
No, I come to that point. I was just starting and talking about the American market itself. Yes. And there might be a little bit less support for green technologies, but if I talk to my counterparts, to the industrial companies, they would continue investing into any kind of green technology, because this investment goes beyond a 4 or 5 years tenure of a government. Yes. So therefore, this bullet is out of the train, and I do believe that the American market, I don't worry too much, which is, let's take the box here. On the other side, where I do believe there would be an impact, it's foreign policies. Yes. And the question of Ukraine, the support of Ukraine on the one side, but also what we would love to have a kind of a predictable government where you know what's the trend, and what's the frame. Because allocating capital, normally you need at least 2 years, yes. In some cases maybe 10 years for the return. You want to have a stable system.
That's right. Of course, we do not know how things will go till the last vote
Sure.
is polled, but things changed after the debate. The other thing is the increase in tariffs on Chinese goods. Trump has said that all imports into the US could be charged 10% more in terms of tariffs, and Chinese goods 60% more. And already EU tariffs are kicking in on Chinese goods. Do you worry about geo-economic fragmentation, and will that impact business, or will that be actually positive for business because jobs are shipped back home?
The interesting answer is both. Oh. The reason is, in principle, we are not a fan of tariffs. We believe that tariffs just make our economies, inflation go up. Yes. You need to have the most competitive costs and see how that goes, and how you can, coming back to, for example, the green transformation of the energy sector, we want the cheapest and best technology available on the market and deployed as fast as possible. Global warming is a global task. So this is one dimension. The other one is, now I'm talking more a little bit selfish about Siemens, is we are one of the most global companies in the world. We are localized. We are localized in the United States, in India, and in China, and in other places in Europe as well. So therefore, if there's a shift for more, we call it glocalization. Yes. It's a global world with more local content. This requires new investments, greenfield investments in different places. And that's tailwind for Siemens, because whenever you want to build something new, a new plant, recommendation number one is make it as digital and as automated as possible in a world where you have less and less labor. So therefore, why wouldn't you go for the latest in digital technology? And Siemens is the place to go. Is it brownfield? Is it greenfield? So for us, it's tailwind. But needless to say, we believe that a low tariff environment would be a better one.
Well, so you have tailwinds even if
yes.
If jobs become, yes. onshored and friendshored.
And you see it in India. I mean, India is on the receiving end. If you talk about reallocation of manufacturing, this is the place to be, and look at our business, how it grows.
You said labor shortage, and that's why I wanted to tell you, welcome to India. We have labor here.
Here, my learning in the last days, I was here talking to our partners and customers, is actually there's no real labor shortage. It's a shortage of skilled labor. So education and training is the name of the game. You have to put more emphasis on it. We are investing in that one too.
You speak like a macroeconomist. I should get you on macro topics as well. But to come back to the Indian macro situation, the capex cycle clearly has benefited Siemens. 2 years ago, you had that big 260 billion rupee order for trains, and you're still doing a good over 50 billion in terms of orders per year. These are largely government orders. Have you in India seen the private sector take on the baton for capex?
Yes, we do. We see, there's a lot of development of bringing new manufacturing to India. And new manufacturing could be more complex products, electronics and like. But it's also about green technologies, semiconductors, batteries. We see also the car industry looking to a 7 million car market, one of the largest one in the world. So therefore, there's a lot of, and when I talk about these industries, don't forget the whole supply chain, tier 1, tier 2. Many of small and medium-sized enterprises are pulled by these investments. And that's what we see in our business too. It's a really strong growth in electrification. All these plants need to be electrified. Low voltage, medium voltage products. Data centers are also mushrooming here in India. Absolutely. We are serving these as well in any kind of electrical equipment, but also in the building automation, climate control, energy efficiency, but also in the automation space.
So you're saying that private sector is also giving Siemens orders. It's not just government.
Yeah.
Okay. Your first order, Sunil Mathur, came with that big 260 billion rupee order for trains. But you all didn't come to the bid in the second order, which was about 300 billion rupees. Will you continue to bid for train bids, which will hopefully come in the new government?
So the government in the last 5 years electrified, this is a record number, 65,000 kilometers of railway electrification. Another 10, 15 to go, and then the whole country is electrified. Congratulations to that. This is really laying foundation for a much better freight, but also passenger transport. So we are invested there. We help electrifying. Signaling is next. We are also putting signaling in place. With the right signaling, you can even double the capacity without laying a new track. And on that backdrop comes, of course, rolling stock. So we are very happy about delivering now 1,200 locomotives with 9,000 horsepower, great business, including the maintenance. This is just the start. We are very good in propulsion systems, which we deliver to our customer, which they are using for commuter trains. We have bogies, which we deliver to our customers, but to our needs as well. And the next wave is definitely making own trains, metro trains, but also commuter trains, not only for India, but also for the export to other countries.
Now, the pointed question I have is that obviously 2 years ago your order book was 310 billion or whatever, because of the railway order. And then last year it came back to the normal 52 billion. Do you see this substantial jump coming again? Will you go in for bigger orders, or even this 50 billion, does it go to 60 billion? Is that the plan?
No, I hope that we will see that again. The rolling stock business is cyclic. You can get a big order and then you jump up and you go down again. So therefore we're measuring that more in rolling for years or something like that. But we definitely want to see, this maybe also a target for my local management here. We definitely want to see that going up, and this peak is not only a peak, but that this is more and more shifting behind. If you look at the demand, if you look at the projects coming up, I would say, and we take a fair share of that, then this comes true.
Okay. No, this 52 billion, let's forget the peak. This 52 billion, does that jump at a 10%, at a 20%? What is the internal target?
So we want to grow at least with the market. So we believe, so in our market assessment, it's not macro GDP, it's now our market assessment. The Indian market for the next 5 years grows by a little bit shy of 10%, so 9 point what. Okay. And we want to take market share. And now you can make your math.
So more than 10%. All right. How are margins? You all did well. Now I'm talking about Siemens India. You did well on margins. I think about 250 basis jump in margins. You think the year ahead looks good for margins? How are your commodity prices doing?
So I hope so. I think we do not guide. We don't guide on margins, but we have a great team on the ground. Winning orders is one thing, executing them flawlessly and with a good margin is another one. We have very strong local product management. We have also strong manufacturing. So therefore, turning now an order backlog, a healthy order backlog, into good profitability and cash flow is what we did in the past, and we continue.
Let me come to the small, intercompany arrangements. Siemens Energy sold stake in Siemens Limited to Siemens AG. So now you own 69%. Was that just to help Siemens Energy out of its intermediate financial problem, or was there any other goal in increasing the stake?
No, there were actually, number one, the whole discussion was indeed triggered by how can we provide very quickly cash for Siemens Energy, and we did. But the other element in it was that once we have that step and we bought them out, by the way, the agreement is they buy it back later on. That's clear because we don't know what's in it. But that triggers now a kind of autopilot process to really disentangle Siemens from Siemens Energy also in India. And this autopilot started already, and we go.
With Siemens Energy being demerged.
It will be a spin-off so that you have two companies with the same shareholding, and then we can get out.
No, I'll tell you why I'm asking you this question. You must have heard that Hyundai is doing an IPO in India of their India unit. The Indian stock markets are in a giving mood. Yeah. So would you want to use that? Would you want to keep 69% in both Siemens Energy and Siemens Limited? Or would you want to give some stake in the Indian, divest here, simply because the market's in such a good position?
Our ultimate target is obviously to dilute our share from Siemens Energy down to zero. This is what we committed to the market on a global basis. Same here on a local basis. That's what we're going to do, and this is the whole meaning of this exercise. What we're going to do. So we will let Siemens Energy go. They stand on their own legs. Exactly.
But will that entire 69% be sold to Siemens Energy, or will divestment also be a part? Again, because you're likely to make a lot of money. The market is happy with valuations.
Absolutely. This is depending on what Siemens Energy is going to do. I think the likelihood is that this goes down, but this is another question. At least from our part, it's clear we want to get out of it, and we will get out of it.
Okay. I hope you know you're trading at 70 times. I'm sure you do.
I do know.
70 or more.
Isn't it great?
So it is great. That's why I was asking. It's a great time to cash in, and Hyundai is showing the way. Oh, yeah. So we are asking all multinationals if they are tempted to come to the Indian market. You will consider that.
We are very happy with the development here, I have to say, and hope we can continue.
No, I'm asking whether you will divest very clearly.
On Siemens Energy?
To the market.
The point is, we are divesting our shares in order to bring it down to zero. The receiving end is Siemens Energy. The assumption is that Siemens Energy will definitely go for 50+1, and the rest might go to the market. I don't know, but
that is their decision. Yep. Dr. Busch, let me stop you there. I have more questions, but we have to take a commercial break. We are back in a jiffy with lots more questions for Dr. Roland Busch on the Indian capex cycle.
CNBC-TV18's most comprehensive and award-winning news show, India Business Hour, drops first on YouTube. So get the first access to the most influential architects of policies and politics, the key newsmakers of the day. Discover the big themes as we decode the business of markets, macros and more. Be the first to go to the heart of all the top stories that drive the day's agenda. Catch the award-winning India Business Hour live every night on YouTube with me, Shireen Bhatt.
India Business Hour live on YouTube at
Welcome back to this very important CNBC TV18 conversation. I have been speaking with Dr. Roland Busch, the President and CEO of Siemens AG. Well, to come back to the order position and the markets, how are your exports doing? I believe Siemens India is the second biggest exporter in the world of Siemens products. Can you give us an idea of whether you want to increase that?
Yeah. So take electrical products, very competitive products, competitive costs in a localized market. So therefore, obviously, we use that leverage in order to export it. I do have appetite for more. It's great to have a local market where your local products and manufacturing can scale, but it's even better if you can leverage into other markets too. We have exports to Middle East, for example,
Yes.
huge demand for electrification. I can think about also the ASEAN market if that grows. So the potential is huge. We talked about mobility. If we can export, we're exporting already bogies, but I can also imagine manufacturing metros for the local market, but also for a global market, because the demand for the car, the type of cars for the local market in India is matching quite well to the demand from other markets too.
Okay. You already have the plant in Aurangabad. You have
Yes, for
invested in
bogies.
that. Is that already an export?
Oh yeah,
you're already exporting from there.
Bogies, we already exporting. We are using that for other places. Next step would be again the higher value, which is locomotives or trains, and then go along.
Yeah, actually, this year you'll have invested 10 billion rupees, I believe, in capex in India. What are the plans? Will this scale up?
No, we said that for the next 5 years we are investing another 110 million euros in the market. There's a clear plan. Okay. The faster we grow, the bigger the number can get, because we do believe that this is a market which is worthwhile investing. We see good returns. We have a very good customer relationship. Is it government customers, private customers? We have strong partners, a lot of momentum in the market, so therefore that should not be the limit.
No, there won't be a limit for orders that come from India because India is in that stage.
True.
What I'm asking is, will you look at more export-oriented investments in India?
Absolutely, absolutely.
And will it go beyond bogies and the plant in Goa?
As I said, electrical products, this is a demand which we see globally, and the capacity, just talking data centers, for example. I mean, this is mushrooming and you see so much demand. We will use all our capacities which we have on a global basis to really serve this market, local and global. So therefore, yes, I do believe that for India, we do export from India to other regions, but this is a potential for definitely more, absolutely.
Okay. More products also?
Yes, absolutely, more products, sure.
Okay. At the moment, your plants in Goa and Aurangabad export. Are you looking for plants elsewhere, or will there be brownfield expansions here?
We have 32 manufacturing sites. So therefore, this is quite a bit. Yeah. Ideally, you go brownfield expansions. That's what you normally do. If there's a need to build a new one, why not? The market is big enough.
Okay. There is, it's not a change in government, but it's a government with a slightly lower majority than previously. How do you view it in terms of orders coming in?
So I learned for the last days, and the feedback what I got is that nothing really changes too much. I also learned that the key ministers are the same as before. They do a great job, by the way, very competent people. So going forward, I think the successful strategy of the last years is just prolonged for the next wave. What does it mean? It's investing in base infrastructure. It's investing in new technologies, or supporting the inflow of direct investments into new technologies. We love that. But it's also really building not only the tier ones or the OEMs, but also the supply chain, tier one, tier twos, suppliers. So therefore, for me, that's just a continuation of what we saw in the past. Rightfully though, because what you see in terms of growth is basically the fruit of a proper investment strategy of the last years.
Okay. Well, finally, let me come to the power sector. Surprise, surprise, India is short on power. This year, we had a terrible summer, and there were very clearly power shortages staring at us. Can you talk to me about the power sector demand that you see and what you want to service, both renewable and others?
This is more a question for Siemens Energy,
yes,
because they do renewables, they do power plants, and they see a huge demand, in particular in gas, but also in transmission, high voltage transmission, massive demand also from India, HVDC kind of transmission lines. But also the wind market seems to have a huge demand. So therefore, from that perspective, I think this is just going. The hunger for energy in India on that growth and also industrial growth is so big that I believe that hydrocarbons still play a role. I do know also nuclear power, which is, I think you have to fire on all cylinders, particularly on those which are not emitting, but there's a certain need. And there's another element in it, which don't forget, India is a very, very strong net importer of hydrocarbon material, oil, gas. Every gigawatt you install in renewables reduces the dependency and makes India self-sufficient or self-reliant on energy. This includes also storage. We talk about hydrogen, which is basically storage of intermittent renewables. So therefore, the logic and the strategy, which I see the handwriting of the government of driving this renewable agenda, driving also hydrogen, is not only the way to go for a greener economy, which is very important for export.
That's right.
Because once we want to export in Europe, you need to have a green footprint of your products. But it's also helping for your self-reliance.
Oh yes, we are at the receiving end of climate reverses. So I take your point entirely. And kind of crude-proofing our external balance has been one of the government's goals, and I think we are almost proofed now. The crude price doesn't move our current account deficit much, but yes, it's far less than it used to be. It used to be a very big element of our current account. Let me end by asking you about the global environment again. How confident are you of global growth? Ultimately, India also grows only if the world grows in a robust fashion. What's your sense? Recently, both the IMF and the World Bank upped the global growth forecast by a smidge, by about 20 basis points to 3.2%, if I'm not mistaken.
Yes.
But you're in a better position because you feel the pulse of world investors. Do you think the world is in a good spot in terms of growth for the next couple of years?
So I do not have a better number than the 3.2% which you mentioned. So from that perspective, I do believe there's a potential for this growth. Yet there's maybe one element in this growth number. I do believe that the world has an embedded inflation. Where does it come from? Number one is the operating model of the world in the past was if you want to manufacture something, bring it to China and leverage, make a labor arbitrage and optimize a value chain. It seems that there's a lot of reallocation of manufacturing. China will still grow, it's a big market, 30% of the industrial GDP sits there, and it will grow, but there will be a relocation of products, of manufacturing. This, at the beginning, costs you more money than incremental investment on an existing base, number one. Number two, the energy transition we are talking about is shifting from an OPEX model, build a cheap gas-fired power plant and pay the price for the gas, to a capex model, which means more expensive renewables, but no operational costs later. So this pulls investments ahead, which is another embedded inflation. So therefore, I see that this is happening, at least for the next, whatever, let's say 10, 15 years. And then obviously once you have your assets written off, then you enjoy a lower energy price. So this we have to take into consideration. Sustainability transition is also costly in the first aspect, so we have to also look for how the investment. I'm not saying that green products are per se more expensive than others. If you do it right, you have a huge opportunity. So therefore, that's one part of the equation. On the other side, we see the average income for India is still so low, so you have a huge potential of having a more stronger middle class building up, which is again stimulating also private consumption alike, which is in the other side. So therefore, a mixed bag of different parameters ending up in a 3.2% growth, which I think it's likely, and that would be good.
Okay. Thank you very much, Dr. Roland Busch. I wonder if your doctorate is in economics, because you speak like an expert on economics as well. Thank you very much. The message is that a lot of good orders coming in from India. India could be a further export base for Siemens products. Global growth modest, 3 to 3.5%, and inflationary. I think that's a message that we have to take on board. Thank you very much, sir.
Thank you.